Let me introduce myself. My name is Kaushik. My topic is ITC, Indian Tobacco Company. First of all, introduction. Good afternoon and welcome to our presentation on ITC, recent stock split. Today, we will discussing about a stock split in why companies choose to them and how ITC recent splits affects investors. What is stock split? A stock split is a corporate action in which a company divides its existing shares into multiple shares. This does not change the overvalue of the company, but it does increase the number of outstanding shares. For example, if the company 10 million shares decide to do two for one stock split, each shareholder would receive an additional share for every share they own, resulting in a total of 20 million shares outstanding. Stock splits are typically done to make shares more affordable for individual investors and improve liquidity in the market. They can also signal to the market the company's management is confident in the future prospects. However, it's important to the note that a stock split does not necessarily indicate that a company is performing well financially. Why do companies do stock splits? One of the main reason why company do stock splits is to make over their shares more affordable investors by reducing price per share. Companies can attract a wider range of investors who can they previously been unable to afford their stock. This can lead to increased demand for the stock and potentially drive up their price. ITC recent stock split. On June 18, 2021, ITC announced 1:2 stock split, which means that announced that each shareholder will receive one additional share for every two share they own. This move was made to increase the liquidity of ITC stock split and wider range of investors. The stock split will take effect on July 23rd, 2021, and the new shareholders will be credited to shareholders account on August 2nd, 2021. This is an existing development for ITC and its investors as it signals the company's confidence in future growth prospects. In conclusion, we have seen that ITC recent stock split has made a significant impact on both the companies and investors. See the graph. We can see the graph 2000 something reduced dollars. Based on analysis, we recommend the investors consider buying ITC in light of recent stock split. Thank you.
Hello everyone. Today I would like to tell you about the corporate actions of ITC. The corporate actions that I am going to be talking about today are acquisitions and mergers of ITC. An acquisition is a business transaction or a corporate action in which a company buys some or all part of another company's stock or assets. This is usually done to take control of or expand on the target company's strengths. In January of this very year, ITC said that they would like to acquire a D2C brand that goes by the name of SFPL, that is Spout Life Foods Private Limited, and that is a brand that is based in Bangalore. They said that they would like to acquire it in 3 to 4 years and that they would like to have 47.5% stake in the same by March 2025. Another recent acquisitions of ITC are Sunrise Foods, which they acquired in May of 2020 for $288 million in Kolkata. The one before that came in March of 2016 that goes by the name of Techno Agri Sciences, which was acquired for a whopping amount of 1.2 billion Indian rupees at Chandigarh. And the one before that came in the Feb of 2015, in which they acquired Shah to Shah for an undisclosed amount at Bridgewaters, US. Now, I would like to tell you about the demergers of ITC. A demerger is a form of corporate restructuring in which an entity's business operations are segregated into one or more components. It is nothing but the converse of a merger or an acquisition. On 14th August 2023, the board of ITC approved a demerger of their hotel business into a completely new entity, ITC Hotels Limited. Once demerged, it will be listed on Bombay Stock Exchange Limited and the National Stock Exchange of India separately in about 15 months. The hotels will also have the license to use the ITC brand name. Under the demerger, the shareholders are set to get one stock in ITC hotels for every 10 stocks held in ITC. Now, they're also set to directly hold 60% of shares in ITC hotels, while the remaining 40% is set to remain with ITC. You might wonder what happens to the price of the stock immediately after a demerger. Well, it goes down because the assets that were once part of the parent companies are removed from the books, which decreases the book's value. Well, in the long run, a demerger actually has a positive impact, which is because it is strategically focused on independent management accountability. Thank you.
Hi everyone, this is Salam. We will be discussing one of the most significant financial decisions taken by ITC in recent years, that is right issue. First, we are going to know what is a right issue, then right issue issued by ITC, and at last impact of right issue. Now, first, what is a right issue? A right issue is a type of offering in which existing shareholders are given the right to purchase additional shares of stock at a discounted price. This allows the company to raise additional capital without having to go through the process of issuing new shares on the open market. It will be usually in form of stock split, and existing shareholders will have advantage of new development in the company. Now, right issues issued by ITC. ITC is a leading Indian industry with a diverse portfolio of business. The company has decided to issue right shares to its existing shareholders, which has generated a lot of interest and speculation in the market. In this presentation, we will discuss why ITC has chosen to go down this route and what impact it could have on the company and its stakeholders. If we consider last 5 years, ITC right issue has been a significant financial event for the company and its stakeholders. Back in 2016, the company issued right shares of worth of 5,000 crore to fund its expansion plans. Back in 2017, July, the share price of ITC increased sharply from 200 rupees per share value to 300 rupees per share value. ITC right issue was a massive success with a total of 6.16 billion shares issued at a subscription price of 315 rupees per share. This resulted in a total amount raised of 19,459 crores. Another right issue in 2019 where the company raised 12,000 crore to reduce its debts and invest in new businesses. Now, impact of right issue. The number paint a clear picture of success of these right issues. From 2018 to 19, ITC net profit rose by 11.92% to 12,464 crores, while its revenue grew by 14.26% to 50,231 crores. By investing in new technologies and expanding its product portfolio, the company was able to attract new customers to it and retain existing ones. This in turn led to higher revenues and profit for the company. Now, this is the graphical representation of growth of share value. If you see back in 2021, it was 230 and now in August, it is around 440. So, this is all about right issue. Thank you so much.
Hello, my name is Abhinay Singh and my topic is buyback share for ITC. The topics are the power of share buyback, unlocking value of ITC, what is share buyback, why ITC consider share buyback, ITC's final performance, share buyback versus dividend, potential risk of share buyback for ITC, share buyback implementation, ITC share buyback plan, communicating share buyback to stakeholders. The power of share buyback, unlocking value of ITC. Share buyback is a powerful tool that can unlock significant value for ITC and its shareholder. By repurchasing its own share, ITC can reduce the number of outstanding shares in the market, which in turn increase the earning per share and boost the stock price. This can also enhance the company's financial flexibility and optimize its capital structure, as excess cash can be used for share buyback instead of sitting idle on the balance sheet. What is share buyback? Share buyback is a process by which a company buys its own share from the market, typically using cash reserve or debt financing. This reduces the number of outstanding shares, which in turn increase the ownership stake of existing shareholders. For ITC, share buyback can be an effective tool to optimize its capital structure and enhance stakeholders' value. By reducing the number of outstanding shares, ITC can boost earning per share and return excess capital to shareholders. Additionally, share buyback can signal management confidence in the company's future prospect, which can attract more investors and support the stock price. Now, why should ICT consider share buyback? Share buyback can be a powerful tool for ITC to optimize its capital structure and enhance shareholder value. By repurchasing its own shares, ITC can reduce the number of outstanding shares in the market, which increases the earning per share and improves the company's financial ratios. This can lead to higher stock prices and greater investors' confidence. Now, ITC's financial performance, a case for share buyback. Over the past few years, ITC can show impressive financial performance with consistent revenue growth and strong profitability. However, the company's balance sheet is currently weighted down by the large cash reserve, which has limited its ability to invest in new growth opportunity and left shareholders wanting more. Share buyback versus dividend. Which is better for ITC? Share buyback and dividend are two common ways for companies to return value to their shareholders. While dividends provide a regular stream of income, share buyback can be more flexible and efficient way of returning value, especially for companies like ITC that have excess cash on hand. Potential risk of share buyback for ITC. One potential risk of share buyback for ITC is that it may reduce the company's flexibility in terms of future investment. By returning capital to shareholders through buyback, ITC may have less cash on hand to pursue growth opportunities such as share buyback implementation best practices. The key to a successful share buyback program lies in its implementation. The following are some best practices for implementing a share buyback program. Define clear objective. Before embarking on a share buyback program, it is important to define clear objectives that align with the company's overall growth strategy. Second one, determine the budget. The budget for a share buyback program should be based on the company's financial performance and future growth prospect. It is important to strike a balance between returning value to shareholder and maintaining adequate liquidity. Thank you.
Hello everyone, let me introduce about myself. My name is Kesri Sai and my topic is ITC share buyback. Let's go to introduction part. Today here we discuss something that is crucial to growth and financial stability of ITC share buyback. But before we diving into the details, let me ask you a question. Have you ever received an important document that lacked a watermark? How did it make you feel? That's because of a watermark serves as a symbol of authentication and trust, and that preciously by having a watermark on every page of the ITC share buyback document is so important. What is ITC share buyback? ITC share buyback refers to the process by which a company buys back its own shares from the market. This is done by offering a premium price to the shareholders who are willing to sell their shares back to the company. The shares brought back and then cancelled, reduce the number of outstanding shares in the market. The benefits of ITC share buybacks are twofold. Firstly, it helps to improve the financial ratio and company as there are fewer shares outstanding. These can lead to an increase in earning per share and return on equity. What is ITC share buyback important? Why is ITC share buyback important? ITC share buyback is an important tool for the company's growth and financial stability. By buying back its own shares, the company reduces the number of outstanding shares in the market, which increases the value of each remaining shares. This can lead the raise of the company's stock price, providing benefits to the both company and the shareholder. Moreover, share buyback can also be used as way as to return excess cash to shareholders, which can improve the investor settlement and attract a new investors. This can help the company to build a reputation as a financial stable and attractive investment option in the eye of potential shareholders. The role of watermark in ITC share buyback. Watermark is a crucial aspect of ITC share buyback documents as it helps to prevent the fraud and protect the company and its shareholders by embedding a unique identifier on the every page of the document. Any attempt at tampering or forgery can be easily detected. In addition to preventing fraud, watermark also helps to establish trust with shareholders. It shows the company takes their own investment seriously and it committed to the transparency and audibility. Benefits of watermark on every page. Having a watermark on every page of ITC share buyback document provides a several benefits that firstly helps to prevent the fraud by making it difficult for the conflict and duplicate the document. This ensures the only genuine documents and circulation and reduce the risk of the fundamental activities. And the final conclusion. The conclusion we have learned the importance of the ITC share buybacks and the role of the watermark in the protecting the company and the shareholders. ITC share buyback helps to improve the company's financial stability, and the watermark helps to dictate the fraud in the company. Thank you, sir.